Well, okay. First of all, my first impressions on the budget of the Minister of Finance. I think he's showing well self confidence. He was once or twice he was a little bit unsure about the teleprompter, but I don't. I think overall the impression was quite good. If you ask me what I think about the budget itself, I think generally most of these economic aggregates are quite achievable. I think it's a realistic budget, but I've got two major issues with the budget overall. The one major issue has to do with the fact that there's very, very little fat in the budget. So if something goes wrong, and quite coincidentally, what happened is that shortly after the budget, Russia invaded Ukraine, and that's one of those things that can potentially go wrong. But if something goes wrong, like for example, Eskom falling over, or another looting spree in South Africa, or Russia invading Ukraine, something like that, then I'm afraid all these estimates of the Minister of Finance will be out of the window. But for now, I agree more or less with him with most of his estimates. That's my one problem. No fat, no moving space for the Minister of Finance. My second problem with the budget is that the Minister of Finance is expecting economic growth of around about 2%, and in fact, below 2% for the next couple of years. And that is a major issue for me, because even if your own Minister of Finance expects economic growth well below 2%, who else, who will then invest in a country where the economy is just not growing, or the economic growth is going to be well below 2%? So this is actually a vote of no confidence in himself, in a way. Our own government has run out of plans. They've run out of options on what to do to get this economy to grow. So that's my first impressions that I've had. I think it's important also to understand the global context before we get to the actual unpacking of the budget. I've got a few things to say about that as well. But the global context is important because a number of things are happening internationally that we need to understand. And of course, new things are happening all the time. And again, the conflict in the Central Europe is one of those relatively new things. But the world economy has recently started opening up. We got a surge of demand internationally. Additional to that, fiscal authorities internationally are boosting demand by literally sending checks to individuals in the United States, as an example. Monetary policy is very, very accommodative still. Interest rates are very low internationally, and all these factors are contributing to high levels of inflation internationally. So what is happening now is that the authorities, the fiscal and monetary authorities internationally, are starting to become less stimulatory, less supportive of economic growth internationally. So fiscal policy is sort of we're probably going to see less fiscal stimulation, and we're already seeing that. But more importantly is that the monetary authorities, the world central banks, are gradually starting to increase in interest rates, and they're reducing quantitative easing, and we are even talking about quantitative tightening. So that is very important to us, because if the Americans start increasing interest rates, as an example, we eventually will have to follow. So we have inflationary pressures internationally, and economists are debating on whether these inflationary pressures are temporary in nature or more permanent. I think we're probably going to see inflation internationally hovering between 3 and 4% for the next, say, 2 or 3 years or so. And that means interest rates internationally can go up by about 1% when you talk about the big countries in the world, like the US, for instance. And then I must mention, okay, so what is happening in Central Europe at the moment will obviously have an impact on South Africa via two channels. The first impact on South Africa, the immediate impact, is via the financial markets. We've already seen the rand taking a knock. We've already seen metal prices going through the roof, which is a good thing for us. But we've already seen the oil price also going to above $100, which is a bad thing for us. All in all, I think the impact will be negative for just about everybody. But we need to wait to see what the real impact on the real economy is going to be. So the first round impact is via the financial markets. And then from there on, the impact will gradually filter through to the real economy. And factors like how long this is going to go on, who's going to get involved, and so on, will determine what the impact on the real economy is going to be in the end. I think a country like South Africa, all in all, is probably going to be affected more negative than positive because of this conflict. And just a side note as well, I think part of the reason why the Americans and NATO is not involved militarily directly in the Ukraine is because I think there's a good possibility, and I think that's the reason why they're not getting involved there, that if they do get involved, that the Chinese may see this as an opportunity to invade Taiwan. So that is just a side note. Okay, coming back to the budget. Um, if you go through my presentation, you will see, and just go one slide down, for example, and leave that there if you don't mind, please. But if you go through my presentation, you will see this graph, and this graph will pop up all the time. And this graph is basically state spending and state revenue as a percentage of GDP. The top line, the red one, is state spending as a percentage of GDP, and you can clearly see that state spending for the past 50 years or so actually doubled relative to the size of the economy. The bottom line is state revenue, that's the various taxes mostly. And we can see if the state spends more money, then of course they need to get in more money from somewhere. And they get it in the form of the various taxes. So that's the important line. And then the gap between the two is the so-called fiscal deficit. And that's the amount of money that the state needs to borrow every year. Then the result of all this borrowing is the very high levels of debt levels. And that's the next slide, please. Very high levels of debt levels. And the next slide will show you then where South Africa's debt to GDP ratio is at the moment. Now, I'm going to leave it there. I'm not going to go through the presentation. I'm just going to leave that slide there. But this is the main obstacle to the Minister of Finance. This is the main challenge to the Minister of Finance. And the challenge is that he wants to spend more money on all sort of things, on poverty alleviation and so-called job creation and all these sort of things. He simply cannot spend that much more money on these sort of things because debt on state, state debt as a percentage of GDP has reached very, very high levels already. And very high levels of state debt to GDP simply means that the interest component of state spending, and currently interest component of state spending is the third most important expense item for the Minister of Finance. It is increasing at a rapid rate, and within a year, interest on state spending, depending what happens on the social security, but interest on state spending can in fact be a larger expense item than social security, as an example. The most important expense item for the Minister of Finance is education, followed by the various grants, the social security support, and the third one is interest on state debt. Those are the three major ones. But within a year, depending what happens to the social security, interest on state debt can be the second most important expense item to the Minister of Finance. And that's the limitation. That's a limitation to the Minister of Finance, and that is simply that he cannot spend that much more money. In fact, he needs to cut back on spending because the state debt levels are just far too high, and at this rate, the state debt will also keep on going up because of the fiscal deficit, that graph that I showed you just before this one. Okay, so just a few highlights on and you've already spoken about the various taxes, but from an economic point of view, a few highlights on the various taxes. The Minister of Finance expects the revenue overrun in the current financial year to be in a region of, he said, 182 billion rand. I disagree with him. I think it's going to be a little bit more, around about 200 billion rand or so. And the main reason for the huge overrun in tax revenue in the current financial year is because of the very strong and nice commodity cycle that we are currently experiencing. This is likely to go on, by the way, now, with especially metal prices going through the roof. The downside to that, of course, is that the oil price is also going up. But this is likely to go on at least in the short term because of the what is happening in Central Europe at the moment. So commodity exporters are doing very, very well. Minister of Finance is really raking in huge amounts of money, more than originally expected, and a total amount of money around is about what I expect that total overrun will be is in the region of about 200 billion. Just please note that the overrun in taxes does not mean that there is a surplus. It simply means that it's still going to be a deficit, but the deficit is going to be a little bit smaller than previously thought. So there still is a deficit, and a substantial deficit that is. The minister now expects the fiscal deficit next year to be about 6% of GDP. Let me just put that in perspective. If you have a 6% deficit to GDP with the economic growth at around about 2%, it's easy to understand that debt will go up even further. All right, before I go back to the debt, come back to the taxes again. Some of the announcements by the Minister of Finance on personal income taxes, you've covered this already. I'm sure the adjustments were more or less in line with inflation, so no real tax reduction there, simply putting us back to where we would have been if it hasn't been for inflation. So it's only the effect of bracket creep that has been addressed. A couple of smaller taxes were increased, like, for example, the various sin taxes. And the big surprise to me on the tax on the revenue side is that the Minister of Finance did not announce an increase in the fuel levy or the road accident fund. I think that is wrong. That is a mistake. I think the Minister of Finance should have increased the fuel levy and should rather have reduced some of the other more damaging taxes to the economy, like, for example, corporate taxes. He should rather have reduced that. He did reduce the corporate tax by 1%. This has been announced 2 years previously already, so this is nothing really new. But if you go through the detail, and again, you guys probably have, is that there's a lot of detail, like, for example, how much you can write off on assessed losses, which to a large extent neutralize this fall in the corporate taxes. So not really much happening on personal income taxes or on corporate taxes. Let me just mention something when it comes to personal income taxes. Personal income taxes, 133,000 individuals in South Africa, 133,000 individuals pay something like 60% of the total personal income taxes in the country. So a few individuals. The personal income taxes in South Africa are exceptionally progressive, which simply means few people pay most of that. If you look at corporate income taxes, it's even worse. Now, listen to this number, something like 770 companies, less than 1,000 companies in South Africa, less than 1,000 companies in South Africa. Let me give you the exact numbers, how many of those companies actually pay the bulk of taxes in South Africa. And I'll get the numbers just now to share that with you, because this is very, very interesting and we need to be aware of this. Here it is. There are 770 companies in South Africa, less than 1,000, 770 companies that pay 63% of all company taxes in South Africa. We can rightfully say in South Africa that companies do not pay taxes, because the majority of them certainly do not pay taxes. Only 770 companies pay 63% of total companies. The previous one on personal income taxes, 133,000 individuals pay a third. 133,000 individuals pay a third of all personal income taxes. It is hugely progressive. And the Minister of Finance already indicated that he cannot increase taxes anymore, because the moment you start increasing taxes more, you go over the so-called Laffer curve. And that means if you increase taxes, your actual collections will come under pressure, because rich people will simply emigrate. And then another big surprise for me as far as taxes are concerned, the Minister of Finance indicated that you have to, from now on, if your net assets exceeds 50 million, you have to actually hand in your balance sheet to SARS as well. The difference between what we had previously and this announcement is that you have to value your assets and liabilities at market value. And I am very concerned about this. The Minister of Finance, obviously, he says it is because we want to make sure that everybody are paying all their taxes. But I'm concerned that this could be the beginning of a so-called wealth tax. Of course, I think SARS would like to know how much they are going to earn by way of capital gains taxes going forward. But I'm concerned that this could be the beginning of a so-called wealth tax. So that's on the tax side. Nothing much really happening on the tax side. Then on expenditure, nothing else than that. On the expenditure side, one or two things that's important for me there. I just want to mention, and that is that we have today nearly 20 million people receiving normal grants. We have more than 10.5 million people receiving the special COVID grant, which have been extended now to next year. And we have 2 million civil servants in South Africa. So we have in South Africa a total number of 31 million people receiving an income from the state every month. And we have 12 million people working in the private sector. Now, those sort of ratios are simply and totally unsustainable. That means for every one person that work in South Africa, there are 2 people that receive some sort of grant from the state, for example. And we know the civil servants are not very productive, and they are mostly, in most cases, a bit overpaid. Now, I've made a bit of a calculation. If the Minister of Finance actually succeeds, if he decides to stop the payment of the special COVID grant next year, March, then of course the number of people receiving grants will fall by more than 10 million. And then the increase on interest on state debt will actually exceed the social payments, and interest on state debt will become the second most important spending item on the budget of the Minister of Finance. I don't think Are they going to stop with the special COVID grant? I think they will continue with that. They're probably going to give it another kind of name, and it will be called, I don't know, maybe this could be the beginning of a basic income grant or whatever the case may be. The point is that you cannot, once you start spending money on people, you can't take that away again. And that is probably what's going to happen. That they will continue with that. On the spending side, what is interesting to me is that the minister, it's not really interesting. We expected this. On the spending side, the other grants were increased more or less in line with inflation. But the minister did announce, and this was announced in previous budgets as well, is that the increase in the wage bill for the civil servants will be below inflation, 1.8%. That's what he will allow the wages to increase over the next 2 or 3 years. This is a big potential obstacle to the Minister of Finance in achieving all his estimates that he set on the budget. And the reason for that is because COSATU certainly is not going to like this. The civil servants are not necessarily very productive, but they can be very, very disruptive. So if they decide to go on a go slow or on strikes, we know what that can lead to. But their increases, the minister is penciling in 1.8% increase for the civil servants over the next 3 years, plus a 20 billion rand, a bit of a sweetener, as to see if they can pull COSATU over the line for them to accept 1.8%. We will have to wait and see if COSATU will be convinced. And also keep in mind that they're currently in the courts to see if the previous promises of government will have to be enforced or not. If the court decides that we have to give the increase to the civil servants that was previously agreed upon, then we can talk about an additional state spending in the region of about 30 billion or so. So that's what the minister announced, a 1.8% increase in the wages of the civil servants, below the inflation rate. And like I've said, that's a real reduction. And if you take money away from people, people get angry. On top of that, 10 million people of the COVID grant, there's a good possibility, well, the Minister of Finance is planning for the COVID grant to come to an end. The point I want to make here is that I'm very concerned about social tension and political tension in South Africa, and that will come from that with more than 12, 13 million people that will be, their wages or their income will be reduced in real terms over the next year or 2, 3. There was also an announcement for a 50% support for the youth wage support to a maximum of 1,500 Rand. And again, that's a total and a complete wrong approach to our unemployment levels and problems that we have in South Africa, because the reason for unemployment in South Africa is because of lack of economic growth. What politicians are trying to do, the symptom is high levels of unemployment and poverty, but the problem really is a lack of economic growth. And the reason why there's a lack of economic growth is because we have a destructive force called the ANC that's in government. Their policies are unclear and they simply do not implement their policies either. In fact, like I've said, the Minister of Finance actually admitted that economic growth in South Africa will be below 2%. That's his expectations, which I agree with more or less. The Minister of Finance did not, except for Eskom, did not make significant announcements as far as the state-owned enterprises are concerned, but there is a 10 billion rand contingency reserve, which I suspect will eventually be used for the state-owned enterprises. Like, for example, the Land Bank, its debt has been, you're not allowed to trade in its debt on the JSE anymore. They're currently in negotiations for restructuring their debt. And I think the Land Bank is certainly crucial, but the Land Bank didn't get anything specific from the Minister of Finance, but I think that 10 billion contingency reserve will be used for that eventually. Then one or two other things that I think is important. The fiscal deficit then will be approximately close to 400 billion in the next financial year, and the Minister of Finance is planning to fund this 400 billion, and is going to fund it mostly by issuing domestic bonds to the tune of about 250 billion. He's going to borrow some money abroad, about 35 billion rands, and he will use existing balances to the tune of about 100 billion rand to fund the fiscal deficit. Maybe just a comment about the composition of debt in South Africa. The composition of debt, although the debt levels are very, very high relative to GDP, but about approximately 10% of that is in foreign denominated currency, in dollars primarily, but also in euros and in yen, but primarily in dollars. And the Reserve Bank, the official reserves at the South African Reserve Bank is in excess of $60 billion. So there's more than enough reserves at the Reserve Bank to be able to cover that outstanding debt of the state. So South Africa will not default on its debt. What will happen eventually if they do not rein in debt, if they cannot stabilize debt? What will happen eventually is that high inflation is likely to be the result of all of this. But we're not going to default on our debt. We have more than enough reserves at the South African Reserve Bank. One or two other things that I think is important to mention and that I've picked up as well. What happened to the zero-based budget? This is not a zero-based budget. This is just another normal budget that, as always, we need to really go through all the expense items to have a real zero-based budget in South Africa. Like I've said, we cannot afford all these high levels of state spending. The state-owned enterprises didn't get money, as I've mentioned, but I think the contingency reserve will be used for that. The new legislation will be proposed whereby individuals will be allowed to access the pension funds without resigning. But at the same time, there will probably be limits on how much you can actually get to the women in the form of payouts on your pension funds before retirement. I think there will be a limitation on that. So you will be able to get access to your pension fund, but not even all of it, even if you resign. Another comment is that, did you know that we pay every year about 44 billion rand in a customs union? I've made a quick calculation. 22 billion of that is nothing but developmental aid. So South Africa is a country, despite the state of our finances, South Africa is a country that gives huge amounts of money in the form of developmental aid to its neighbors. We call it a part of the customs union payment, but a large chunk of that is actually nothing more but developmental aid. So why don't we call it what it is, and that is developmental aid? Another, and it's a bit of a technical thing, is that South Africa monetary area, there are many countries that belong to the South African monetary area. South Africa, Eswatini, Swaziland, Namibia, those sort of countries, they're all part of our monetary area, which means that they basically use the South African rand, the currency, our South African rand. They give it other names like the Namibian dollar and so on, but it's basically is the South African rand. And remember, if somebody else uses your currency, then they pay tax to you. And because of that, we make a calculation, and then we repay that to the monetary area members, to the tune of 1.8 billion annually. So the Minister of Finance budgeted for 1.8 billion repayment of this tax that these monetary members pay to us in the form of 1.8 billion. The reason I mention this, this is something, as far as I'm concerned, that should not be on the income statement, because this is basically what the budget is of the Minister of Finance, but it should be moved to the South African Reserve Bank. In the end, it doesn't really matter, because profits at the Reserve Bank and losses is for the taxpayer in any event. But from an accountancy point of view, I would rather have that on the income statement of the South African Reserve Bank. One or two other comments, as that the IMF, just before the budget, issued a number of concerns that they have. And I've touched on many of these concerns, high levels of state debt. But the IMF also mentioned, and I agree with that, is that they are very concerned about the high levels of debt that is held on by the South African banks on their balance sheets. So they're getting concerned about that. Foreigners are selling South African debt. They have been the last couple of months, and the South African banks are buying that, and the IMF is getting concerned about that. Then maybe just one or two other comments that I would like to make. One is that I don't know if people realize this, but we've gone through a massive privatization drive the last couple of decades. Now, let me repeat that. We've gone through a massive privatization drive the last, say, 10 or 20 years in South Africa, 25 years. Now, let me give you some examples. South African Airways, in the early 1990s, South African Airways was flying just about 100% of the domestic routes in South Africa. So the South African Airways was basically the only airline flying domestic routes in South Africa. Today, South African Airways flies nothing. Nothing. I know there are all sort of plans. I'm pretty sure those plans are not going to work in any of it. But the point is, the private sector has taken over all those domestic routes. South African Airways is not flying a single one anymore, which basically means that we've privatized the airlines in South Africa, and the state got nothing for that. Absolutely nothing. No money. But it has been privatized. And there are more examples of that, many of them. And I've got a lot of examples here. Let me give you another one. The post office in the 1990s was the sole the only organization that was allowed, well, that was basically delivering parcels and transporting parcels and letters. Today, the post office is probably not handling very, very few parcels, probably only about 10% or so of the parcels, while most of the parcels in South Africa today are handled by the private sector, Dawn Wing and those guys. While they still have a monopoly on letters, but in practice, what happens is that the private sector also today delivers letters, because the post office is also completely and totally bankrupt, and of course, a horrible service that you get from them. And that basically means that the post office also has been privatized. And again, the state got nothing for the fact that the post office has been privatized, because they are so completely and totally incompetent that the private sector simply stepped in. The same goes for railroads. A lot of that rail stuff that's supposed to be transported on the railroads are now being transported on roads by the private sector. And again, railroads have been privatized. And the state got nothing for that. So much so that the minister actually of transport actually invited the private sector to participate in the railroads and to start using the tracks in South Africa, because they are completely incompetent to do that themselves. And there are many other examples. Even the police has been privatized. The police, there are 3.5 times as many private sector security people in South Africa than police officers, as an example. All right, just a quick comment, one or two things on the allocation of assets. Having a look at the budget and what's currently happening internationally, here is if there are any questions, of course, I will be happy to take those. But a quick allocation of your portfolio. I think be a little bit overweight in local bonds. The yields are very, very attractive, although the last day or two things really moved in the wrong direction because of what's happening in Europe. But the yields on our local bonds are very, very attractive, and it's a very liquid market. Local equities also haven't been doing not too badly the last couple of weeks and months and so on. But again, developments in Central Europe is making things a little bit more difficult, but local equities could be part of your portfolio as well. International bonds, stay away from that. Don't touch international bonds. Yields are far too unattractive for that. And international equities, be very careful. Markets will be very, very volatile because of all sort of reasons like interest rates increases and what's happening in Europe at the moment as well. So very importantly, let me just make this point as well. Especially if I'm right on this wealth tax that I'm concerned about, it is very important to make sure that a substantial portion of your portfolio is invested abroad. There are many risks in doing that. It's just make more sense to invest in abroad because there are more opportunities. But the main risks are obviously market risks. Markets are all over the place. But make sure that you have the right structures in place. Make sure that you have the right structures in place. It is possible, totally legally, to put structures in place where you are not necessarily the owner anymore of your assets, but you can still be in control of your assets. And that's what you want to achieve. You don't want to be the owner, but you just want to be in control of your assets. And then just a last comment on the exchange rate of the currency, the rand. At the moment, I know it's a little bit weaker now, the last day or so, but the rand is more or less fairly priced at the moment. If the rand goes to 17, 18, I'll sit on my hands. I won't move money out of South Africa. But if the rand dips below 14, 13 and a half, somewhere there to the US dollar, then I will really be aggressively move money out of South Africa. All in all, the budget, I think it's a realistic budget, but we have to understand that we've really reached the end of the line. There are many potential things that can go wrong, that can derail most of these estimates of the Minister of Finance. I think for now, I think it's achievable, much of this. But like I've said, who knows what's going to happen? Who knows where the next crisis is going to be? And it just might be that what is currently happening in Central Europe could be the crisis that can derail many of these estimates of the Minister of Finance. So the biggest challenge for the Minister of Finance is to level out the debt to GDP ratio, that graph that you're looking out for now. The Minister of Finance reckons that it will level out at about 75% to GDP in 2 years' time. The jury is out on whether we will be able to do that. For now, it is possible to achieve that, but it's certainly not going to be a walk in the park. It's going to be quite difficult to actually do that. Okay, thank you very much